Recession 2025 is here. Inflation is eating away at savings. Job layoffs are skyrocketing, and interest rates are through the roof. People are panicking, but while most are struggling, a few will come out richer than ever. The question is, which side will you be on? Welcome to today's episode, where we're breaking down exactly how to survive and even thrive during this economic downturn. We'll cover where to put your money to keep it safe, how to avoid financial traps that could ruin you, and most importantly, how smart investors turn recessions into opportunities. John, you've studied financial crises for years. What's your take? Is this just another recession, or is it something bigger?
Michael, this is shaping up to be one of the biggest financial resets of our generation. History shows us that recessions don't just destroy wealth, they transfer it. During every major crash, most people lose everything, while a few come out richer than ever. 1929 Great Depression, the stock market crashed, but smart investors bought undervalued assets and became millionaires. 2008 financial crisis, real estate collapsed, but those who had cash bought homes at 50% off and made fortunes. 2020 COVID crash, markets tanked, but those who invested early in tech stocks and crypto made 10x returns. The pattern is always the same. The unprepared panic, sell, and lose everything. The smart ones wait, buy cheap assets, and build wealth. So, the question is, what should you do right now to be on the winning side? That's exactly what we're going to cover today.
All right, let's start with what not to do. What are the biggest financial mistakes people make in a crisis?
Great question. Most people react emotionally to recessions instead of strategically. Here are the top 5 financial mistakes that could ruin you in 2025. 1. Panic selling investments. The one mistake people make is selling their stocks, crypto, or assets when the market crashes. Example, in 2008, the stock market dropped 50%. Many people panicked and sold their shares at the bottom. But the smart investors who bought instead of selling, they made massive profits when the market recovered. Lesson: if you own strong assets, don't sell in panic. Recessions are temporary. Wealth is built by holding long-term. 2. Taking on high-interest debt. Another huge mistake is using credit cards or loans to survive. Example, a $10,000 credit card debt at 20% interest will cost you $20,000 plus over time. A $500 monthly car payment during a recession? That could be financial suicide if you lose your job. Lesson: avoid new debt, pay off high-interest loans ASAP, and build cash reserves. 3. Ignoring emergency funds. Why do so many people struggle in recessions? Because they have no savings. Studies show 60% of Americans can't handle a $1,000 emergency. One job loss, one medical bill, and they're broke overnight. Lesson: if you don't have 6 to 12 months of savings, start building an emergency fund now. 4. Keeping too much cash. Wait, isn't cash important in a recession? Yes, but there's a balance. With inflation at 7% plus, keeping too much cash is like losing money every year. Lesson: keep some cash for emergencies, but invest the rest in inflation-proof assets. 5. Following bad financial advice. When times get tough, bad advice spreads like wildfire. Buy any real estate, it always goes up. Wrong prices will drop further in 2025. Put all your money in gold. Not a bad hedge, but it won't grow wealth. Crypto is dead. People said the same in 2018 before Bitcoin hit $69,000. Lesson: don't follow the crowd. Study financial history, listen to experts, and think long-term.
So, in summary, stay calm, avoid bad debt, save wisely, and don't follow mainstream panic?
Exactly. The key to thriving in a recession is being prepared while others panic.
All right, let's get practical. If someone's struggling financially, how do they build a budget that actually works in a recession?
Good question. Budgeting during a recession isn't the same as during normal times. You have to prioritize survival and security. Here's the recession-proof budget formula. 1. Cut unnecessary expenses. Luxury subscriptions, Netflix, gym, fancy coffee, etc. Expensive car leases or financing, downgrade if needed. Eating out and impulse spending to cook at home. Goal: lower your monthly expenses so you can survive even if your income drops. 2. Increase emergency savings. Aim for 6 to 12 months of living expenses in cash. Example: if your monthly expenses are $3,000, you should have at least $18,000 saved up. Why? Because recessions bring job layoffs, medical bills, and unexpected crises. The more cash you have, the safer you are. 3. Build recession-proof income streams. Start a side hustle, freelancing, consulting, online business. Learn a high-income skill: sales, marketing, AI, automation. Invest in inflation-proof assets, stocks, commodities, crypto. Rule of thumb: if your income comes from only one source, you're at risk. Always have a backup plan.
That makes so much sense. It's about being lean, smart, and prepared so you don't get wiped out.
Exactly. If you take action now, you won't just survive, you'll thrive while others struggle.
John, real estate is one of the biggest financial decisions people make. Right now, home prices are falling in some areas, but interest rates are sky high. Should people buy a house now or wait?
Great question. And the answer is, it depends on your situation. 1. Who should not buy a home right now? If you're relying on a high mortgage, bad idea. If you don't have at least 20% down payment, wait. If you have unstable income, hold off. Why? Because high interest rates equals expensive loans. A $300,000 mortgage today could cost you $600,000 over 30 years just in interest. Example: in 2020, mortgage rates were around 3%. That meant a $2,000 monthly payment could buy you a $500,000 home. In 2025, with rates at 7% plus, that same payment only gets you a $300,000 home. Lesson: if you finance at high rates, you're giving the bank double or even triple the original price of your home over time. 2. Who should consider buying? If you have a lot of cash and can negotiate a low price. If you plan to house hack, rent out rooms or units. If you find a foreclosure or distressed sale 30 to 50% below market price. In 2008, smart investors bought homes for pennies on the dollar during the crash and became millionaires within a decade. The same opportunity is coming in 2025 to 2026.
So, you're saying patience could save people tens or even hundreds of thousands of dollars.
Exactly. Cash buyers will dominate the market soon. If you're smart, you'll wait until the bottom and scoop up assets when banks start panicking.
Many people are worried about losing their jobs. Mass layoffs are happening everywhere. What's the best way to protect your income?
This is crucial. During a recession, job security becomes priority. 1. The people who get laid off first. Low-skill workers with replaceable jobs. Employees with high salaries who don't bring direct value. People who don't upskill or adapt to new trends. 2. How to become unfireable. Make yourself indispensable. Provide real value. Take on projects. Solve company problems. Develop high-income skills. Learn tech, sales, automation, digital marketing. Build a second income stream. Freelancing, investing, side business. Example: in 2008, thousands of corporate workers got fired, but the ones who had skills in demand finance, crisis management, digital industries not only kept their jobs, they got raises and promotions. Lesson: if you have a valuable skill set, you become an asset, not a liability.
What side hustles or alternative income streams would you recommend?
Great question. Here's where to focus. 3. Best recession-proof income streams. 1. Freelancing and consulting, high-income skills like copywriting, sales, or coding. 2. Investing in crisis, buying undervalued stocks, real estate, or crypto. 3. Creating digital products, courses, ebooks, automation tools. 4. Content monetization, YouTube, newsletters, paid communities. Rule of thumb: if your income only comes from one source, you're at risk. Diversify.
Let's talk investing. What are the best assets to buy right now?
Smart investors love recessions. This is when the biggest opportunities appear. 1. Stocks. Buy low, hold long. When markets crash, people panic. But the wealthy buy at the bottom and make fortunes. Example, if you invested $10,000 in Amazon in 2008, it would be worth $350,000 plus today. Best sectors for 2025: energy and commodities, oil, gold, silver, inflation protection, healthcare and pharma, recession-proof industry, tech, AI and automation, future growth sector. 2. Crypto, opportunity or trap. Crypto is risky but also high reward. Smart investors buy during the crash and wait for the next cycle. Best crypto strategy for 2025: only buy BTC and ETH, avoid meme coins. DCA dollar cost averaging, buy small amounts over time. Hold for 3 to 5 years minimum. Example, in 2018, Bitcoin crashed to $3,000. By 2021, it hit $69,000. The same cycle will repeat. 3. Real estate. Wait for the bloodbath. Housing markets are about to drop hard. Smart investors will wait until 2026 to 2027 to buy cheap properties from distressed sellers.
So the goal is, buy when there's blood in the streets.
Exactly. Be patient and keep cash ready.
All right, John, final thoughts. What should people do right now to prepare?
3 simple steps. 1. Build cash reserves, have 6 to 12 months of savings. 2. Upgrade your skills, become unreplaceable at work. 3. Invest smart, be ready to buy assets at a discount. Recessions don't destroy wealth. They transfer it from the unprepared to the smart investors. Most will panic and lose money. But if you prepare now, you can turn this crisis into the biggest opportunity of your life.
That's it, guys. Take action now. Thanks, John, for the insights.
And don't forget to subscribe for more financial insights. See you in the next episode.